two small cap stocks in my portfolio right now. I'm going to discuss them with you guys in the video. I have pretty much never really done this. Sometimes I talk about them in one of my videos like I did before. I said revealing my micro cap investment strategy. I talked about one stock that I owned back then and I still own it. And sometimes I talk about them, but I haven't really done a full video on it. So in this video, I'm going to give you my cost basis on them. I'm going to give you my buy price, which I believe is a good price for people that would like to enter or set a price alert for the future. I'm going to give you my thesis and tell you why I own them and everything about these stocks. And these stocks and my strategy in general with small cap stocks are really what makes up the core of my investment strategy, or the core of the reasons why I'm up 26% year to date versus the S&P and the Nasdaq at 7%, more than 3x the S&P and the Nasdaq. It's because I believe in order to try and to do better than average, you have to do something that most people aren't doing. And you have to buy stocks that most people aren't really buying. And I can guarantee you, if you haven't been watching my videos, you likely have never heard of these two stocks in your life, ever. I can promise you that. You'd let me know in the comments. If you've been watching my videos for 8 months, maybe. But if you haven't, you likely have never heard of them. And you will never pretty much hear of them because the YouTube algorithm is programmed to push up stocks that people want to hear about, meaning popular stocks like Nvidia, Tesla, Amazon. The stock I talked about in this video is up 100% or around 130% from this price in 8 months, but only got 2,500 views. But if I did a video on Alibaba, it would get 5,000 or 10,000 views easily, because this is what the YouTube algorithm is pushing. And this is why I try to focus on stocks no one has heard of them, no one talks about them. This is why these opportunities exist. I'm going to share two of them here in the video. The first one is a stock I talked about before. It's called MAMA, Mama's Creations. My cost basis is $1.74, and I'm up 278% from my buy last year on the stock. Now, a lot of you will look at that, you will skip the video, you will close the video because the stock is up 853%, and it's because I'm up 278%. That means you missed the boat and you could never buy the stock again. This is what most people would think. But what I would do, if I was watching this video, I would read the thesis, look at everything, and set up a buy alert, because you're gonna always have a story, some kind of drama that causes a sell-off in some stock, and this is when you entered. This is how I entered in this stock, and this is how I entered in many stocks. I look at the thesis, watch and read everything, and then I set a price alert on Yahoo Finance, so whenever it gets there in the future, I have all the knowledge to enter a position in the stock. I'm gonna give you this buy price and everything here in the video. By Mama's Creations, this is the stock I talked about here, by the way, and only got 2,500 views when I was sitting at $3 per share. But Mama's Creations is a stock or a company that owns a lot of just brands, like a lot of food stuff, mainly meatballs. This is one of their specialties, Mama Mancini's meatballs. Maybe you heard of them. And they have other things like salads, pasta, olives, sandwiches. They're trying to expand in sushi and, pizzas and many different things. But it's just a food company, boring food company, up 853% over the last 5 years. And it's mainly from 2023, from the bottom. It's up 500%. Yet you never heard of it. You've never seen it on YouTube, because this is what the YouTube algorithm pushes. And if you're interested in learning more about these stocks, I have like 4 or 5 of them in my own investment group, and I give you whenever I buy them and everything, if you're serious and if you're interested in learning more about such investments. But in terms of the stock, they do distribute these products and many popular retailers. One of them is Costco in 2023. It was a new one. It's not in all Costco locations, but a lot of them, they are expanding in these stores and they are finding success. But they have been with Publix for a long time, and they increased SKUs, Sam's Club and everything. So it's just a food company, very simple stuff. Now, the key with this food company is the CEO. This is why I invested in this company. If you go on YouTube, you search the name, for example, Mama's Creations CEO interview, and you just watch the CEO, you're going to be fired up to own the company. You're going to believe in the thesis. You're going to believe in the future. And this guy, what he did, his numbers are absolutely insane. He took over the company like in early 2023, right when I first bought it, after the first quarter. And he looked at everything. The old management changes were absolutely dumb. I mean, nothing made sense. Like they have, for example, 2 deliveries to a specific store. So they take 2 trucks in the same day instead of putting the products in 1 truck, taking it 1 time instead of 2 times, and saving on margins. It was absolutely insane. So this is why he always says in his earnings call, he says margin, margin, and then margin. And he took gross margins from 11.9% to 29.4%. And absolutely insane. One of the reasons you should be invested is with the CEO. And he really controls cost and he looks at everything. Something else he says, he says what gets measured gets improved. He measures every single metric, every single margin. He increases prices, does certain things. Just an amazing, amazing CEO. And I'm very happy to be invested with him. He took earnings per share from negative 25 cents to 227 to 651 in 2024. So this is one of the reasons the stock is up so much. It's not all hype. It's not all a multiple expansion. The CEO really improved the fundamentals in the company. Financials are amazing, even in the last quarter. Even though they had an amazing revenue expansion, they were still able to increase the revenues 17%. And this is why the stock went up on earnings. Amazing numbers. I mean, the growth is sustainable. Whenever you have such growth, all the market cares about is the growth a one-off or is the growth sustainable? And in terms of Mama's Creations, the CEO is showing us that the growth is actually sustainable. Now, in terms of net income, it says it declined 24%, which is not really true because last year they had like a benefit of $500,000. So if you adjusted for last year, net income was actually up like 0.1 million, which was almost nothing. And this is because they had to invest in marketing and get some new people to market the products. They're trying to enter Walmart, they're trying to enter Target. They had no marketing team and he'll be building up the marketing team. So this is just part of the process. I think this year is going to be a little bit slow and then growth is going to pick up again in the future. In terms of my thesis with the company, this is the CEO's own guidance and he talks about it in his interviews. He talks about it in earnings call and he has a plan for it. And his plan is to become a $1 billion deli solution provider by 2030, meaning he's going to make up around $1 billion in sales by 2030. This is his goal, although it seems unachievable, but he's going to be doing a lot of acquisitions, a lot of different things, and the balance sheet can support acquisitions, especially right now. They went from only having almost 900,000 in cash and 11 million in debt. Now they have 11 million in cash and 8.7 million of debt. And they have a credit facility and they can easily do acquisitions. So this is one way he's going to get to $1 billion. But if the CEO is right, and I looked at everything he did, I looked at his margin expansion, I looked at the revenue growth, everything he's changed in the company. If the CEO is right, and if I believe in the CEO, and we get $1 billion by 2030, this is $1 billion in sales. Now, the current net income margins are around 6.5%. The CEO's target is 10% by 2030. And 10% is very achievable for a food company. Some food companies have 12 to 15%. But if I take the 10% of $1 billion in sales, this is $100 million in net income. Now, $100 million, if the company is still growing rapidly, I would say 20 times earnings. So $100 million at 20 times earnings, this is a $2 billion company 5 years from now. The current market cap is $245 million. This is like a 9x or pretty close to a 10x over the last 5 years. And you might say, yeah, but what if they don't hit $1 billion? Well, even if it takes them 10 years, not 2030, 2035, a 9x in 10 years is still not a bad return. And even if they hit half of it, they hit 500 million. And they trade at 15 times earnings, then a 4 or 5x in 5 years is still not a bad return. So for me, this is why I'm holding the stock, even though I'm up so much, 278%. And even though the stock right now is trading at 36 times earnings. I mean, this is absolutely crazy for a food company. But there were many times where the stock was overvalued. It traded at 23, 25 times earnings, 28 times earnings, and I haven't sold a single share. I had 35% declines with the stock, and I haven't sold a single share. And this is because I learned the hard way that a lot of these stocks, they are priced so high because they ultimately grow into the overvaluation and they keep growing. And I showed you exactly how the stock is sitting at 36 times and how it could even still offer 4 to 5x on the low end. In terms of upside potential, for a buy price, the stock has been on a massive rally. It's an extremely predictable stock. A lot of you, I would say, technical analysts would understand this. And the stock is likely, topping out in my opinion, and it will likely have another 28% decline. I had a 28% decline over here, a 25% decline over here, then another 20% decline over here. I think we're due to a 28% pullback, which will put the stock at $4.75. I bought it at $1.74 per share, but a lot of people joined my investment group a little bit later, and I gave them buy prices where I believe the stock was a buy, and my main way to doing it was looking at this trend line. And the first buy was around $1.74, was close to mine. The second one was $3.59. It was also a good time to buy the stock. The third time was not long ago at $4.41, and a lot of people in my group, they bought it at $4.41. And I think the next one is around $4.75. So if you're someone that's a long-term investor, I mean, even right now, it's not a bad stock if you can afford to see a decline and not panic or not get crazy and believe in the long-term investment like I do. But if not, if you're more conservative, I mean, I would wait for a pullback. 36 times earnings is expensive for the stock, but if they do deliver, I mean, this is nothing, and this is how I learned it the hard way. But I still own Mama's Creation stock. I'm not going to sell a single share unless the fundamentals get really worse and the long-term investment, changes, or unless the stock goes to 100 times earnings. Although I don't see it happening, but this is my thesis on the stock, and it's one of my best performers over the last year. Now, the second one, I talked about it not long ago. It's also been doing very, very well, and this is a company in Canada, so you would need a broker like something like Fidelity or Interactive Brokers to be able to buy the stock. I have a link for Interactive Brokers in the comments if you're interested. This is the broker that I use for options and to buy international stocks in the UK, in Canada, and in many different places. Bird Construction, my cost basis is $16.98. Now the stock is sitting around $19.92, and I'm up around 20% on Bird Construction stock. This is another one. It's just a construction company. Year to date, it's up 40%. Over the last year, it's up 132%. And over the last 5 years, it's up 235%. And if you look at it from 2023, it's up like 142%. And these are stocks, again, you never heard of them, and you never will, because this is how the YouTube algorithm pushes. And this is why these opportunities exist. And Bird Construction, you're going to see that it's way cheaper than Mama's Creations. But Bird Construction is a construction company in Canada. They have a lot of talent, a lot of experience, and they focus on many different projects like nuclear projects, wind, solar, carbon transfer or carbon efficiency for a lot of companies to meet their goals by 2030, 2035, or 2040. A lot of things in battery storage, power, a lot of electricity stuff, pipelines, construction, infrastructure projects, manufacturing, mining, residential. They build homes, they build towers, they build healthcare facilities. So it's a construction company in Canada. You could say a small conglomerate that has been growing rapidly. And normally construction is extremely cyclical, and this is the biggest risk with these stocks. But what makes Bird Construction different is first, they have a backlog. The backlog, if you combine the pending backlog and the backlog, is a little bit more than $5 billion. So they have $5 billion of backlog. The market cap is like $1 billion. So the backlog is 5 times the market cap, and they also have $1.1 billion in recurring revenues. And this is something that they've been focusing on over the last year or two to try to get a lot of contracts, for example, to maintain certain buildings, maintain certain utility construction sites, and they get paid pretty much a recurring revenue service for them to keep maintaining that stuff in nuclear, in energy, mining, oil. So this is something that always has to be done, certain maintenance stuff, and they're getting more recurring revenue, which is more visible. So they have $1.1 billion of recurring revenue contracts. And this is amazing for Bird Construction. It's going to ride a lot of tailwinds in Canada. One of them is $125 to $140 billion that's estimated that companies have to invest every single year to transition to a net zero target by 2050. So a lot of the companies that have to ultimately do that, they can use a lot of the Bird Construction services for them to be able to achieve these goals. As you know, in Canada, they have a lot of immigration over there, and immigration has been increasing, population has been booming, and Canada has to double the electricity supply for them to keep up the infrastructure and investment projects and for them to be able to sustain everything. And Bird Construction has been winning a lot of contracts in this area, and they're going to benefit from it. And $40 billion in nuclear opportunities. They also won a nuclear contract not long ago. I can put up the picture. And it's been doing a lot of things in Canada. It's an amazing, amazing company with a lot of experience. Now, if you look at the growth numbers, 22% revenue growth over the last quarter, gross profit, 26% growth, adjusted EBITDA, 43% growth, net income, 59.9, 60% growth in net income. Now, if you're looking at these numbers, 60% growth of net income, 22% revenues, and even overall on the year in 2023, they had 18% revenue growth and 43% net income growth. Now, if you're looking at such numbers, you would think, oh, this stock is trading at 30 times earnings, 40 times earnings, 20 times earnings. It's not even close. This stock is trading at 11 times earnings. And when I talked about it on YouTube, it was trading around 10 times earnings, or around 9.5 times actually. But now at 11 times earnings, massive, massive growth. Now, even if they just grow half of that, if they don't grow net income 60%, they grow at 15, 20%, I'm fine. This is still an amazing investment with you paying only 11 times. There's two reasons why it's trading at 11 times earnings. The first reason is that, again, a lot of people, they don't know about the company. It's not listed on the NASDAQ or the New York Stock Exchange. It's not available on Robinhood and every single broker. So a lot of these things in Canada, they trade at a discount. And that's why I own like 4 or 5 Canadian stocks. And I've been finding a lot of value over there. But the second reason why it's trading at 11 times earnings is because they have very low net income margins of only 3%. This is very low net income margins. And it, of course, warrants a much lower multiple. But I still believe 11 times earnings is cheap for 3% net income margins. And for a company that has been growing, net income 40 and 50%. And they've been doing it through acquisitions. So they do a lot of acquisitions and they also pay a dividend. So this is the key. And because they've been focusing a lot on recurring revenue contracts, they were able to increase net income margins from 2% to 3%. And this is a big deal for the company. And I believe they can continue increasing their net income margin in the future. Now, if we look at the company, it's only trading at a $793 million US dollar market cap for Bird Construction. Now, the way they've been growing everything, they've been growing 15% revenues, 20% revenues. They've been growing net income 40 to 35, sometimes 50% net income growth. Now, even if they just continue acquisitions, they continue doing what they're doing with construction, I just don't see why this cannot become a $7 or $8 billion construction conglomerate 10 or 15 years out. If they just keep doing the construction, they keep doing a lot of the merger and acquisitions they've been doing, and they keep paying a dividend, doing a lot of different things. So, I mean, I don't really know the long-term upside potential, but the way I look at the numbers, it has been growing rapidly for the last 2 or 3 years. And if they could just do half of that, then even 11 times earnings is not overvalued for a company like Bird Construction. The biggest risk with Bird Construction is the cyclicality. And what gives me safety is the backlog. So I've been watching the backlog every quarter, and it has continued to grow every quarter. Now, if it does not grow for a quarter or two, it declines for 2 quarters, then I could start getting concerned. So maybe construction is slowing down. Although the tailwinds in Canada are huge, and very few people understand the construction boom that has started and is about to continue in Canada. And I'm invested with many different ways in the construction sector in Canada. And if you want to, again, do more updates and learn more about these stocks and a few more, I talked about them in my own group if you're interested. The link is in the description. And it was just about 2 stocks that I own. Maybe you never heard of them. Tell me if you did or not. But again, not financial advice, just my thesis. Thank you again for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.